story with Oxy that makes you confident that the growth will be there, or is it really driven by what management is doing?
It's partly driven by what management doing. They have new management that has committed to some of the things that we like to hear about. It's an oily company, not as much natural gas, and we favor that right now. But they are coming out with some plans. I think they're going to have an investor conference in November, and they're going to talk about some divestitures and other issues that are going to enhance shareholder return. And that's one reason why we like them a lot.
Very quickly, you like the balanced approach, but I want to ask you about emerging markets, because that's been an area of disappointment for many investors this year. What are your current thoughts about some opportunities in emerging markets, if at all?
Well, you know, emerging markets have underperformed for a number of years for a variety of reasons. The commodity bust and mining companies and the European slowdown. The latest example, of course, is the taper in currency fears. But along that path, emerging markets have become very undervalued relative to the rest of the world. They're selling about 10 times earnings. And when you look at them, they're still going to have a much higher GDP growth rate, double-digit earnings growth, and you know, they're in much better condition or shape in the aggregate than they were many years ago during the last currency crisis. Their current account deficits are better, their currencies are stronger, they can weather that storm better. So we still think from a growth perspective, it's the place to be for the next 10 years, and you're starting out at a very good valuation in emerging markets relative to what Europe and the US is at right now.